In today's video, I'm going to cover the whole entire market in terms of Nasdaq, S&P 500, and then specifically looking at the ETFs QQQ and SPY for Nasdaq and S&P 500. And then I'm going to go over the economic calendar, 10-year treasury, crude oil, and then some remarks on the CPI numbers that came out today. Some of them came in better than expected, and some of them came in as expected. Now the significance of that is it kind of gives the more confidence boost to the market in terms of the Fed will cut interest rates sooner rather than later, if that makes sense. And again, based off Jerome Powell's statements 2 times, one from the last speech and then one from prior, stating that most likely, in his opinion, the next change in the rate will be most likely to the downside, so a cut rather than an increase to the upside, right? So we'll see what happens, but it definitely gave a boost of confidence. We made all-time highs today in terms of both Nasdaq and S&P 500, and I'm going to go over the analysis. But before I do go in terms of analysis and then price actions, resistance and support and all that stuff, I'm going to go over the economic calendar, 10-year treasury, crude oil, and then get to that. So in terms of economic calendar, at 8:30 a.m., we're looking at all these numbers coming out: initial jobless claims, Philadelphia Fed manufacturing survey, housing starts, building permits, import price index, and then import price index minus fuel. And then at 9:15 a.m. we have industrial production, and we have capacity utilization. And then at 10 a.m. we have Richmond Fed President Tom Barkin TV interview, as well as a Fed Vice Chair for Supervision Michael Baer testifies. 12 p.m. we have Cleveland Fed President Loretta Mazur speak. And at 3:50 p.m. we have Atlanta Fed President Raphael Bostic speaks. So that's happening. One quick thing though, mid next week, so on Wednesday, we have FOMC meeting at 2 p.m. Wednesday. Again, so that is next week. So that is important just to keep in mind, because in terms of the charts, they are showing the upside. We broke through resistance levels. We broke through all-time highs. So the expectation you could expect is, it seems like we're just going to keep going up hypothetically. Now, we do have the Fed meeting minutes next week. Plus, at the same time, it could be a false breakout to the upside and then just come back down. I'm going to show as to why too. Now we have 10-year treasury at 4.324%, so basically decreasing, which entails that usually when this gets lower, there's more money that flows into the market in terms of stocks, so stocks tend to go up higher. Whereas because this is a more safer investment, but when it drops, it's not really worth it. When it gets lower and lower, it's more better to invest in stocks, right? In terms of crude oil, we're at $78.98 per barrel. And then in terms of analysis, just for the new viewers quickly, we have a 10-year not 10-year, but since 2010, upward trend resistance line and upward trend support level, main channel focus, broke through since 2020 to 2022 right here. Now for the S&P 500, we did not break through it, and it's basically the same channel, so I'm going to go over that for the S&P 500 as well. This is QQQ, ETF for Nasdaq, but it's just a condensed version, so the numbers are correlated basically, but they are a little bit different. We close at $452.90. Again, this is QQQ, ETF for Nasdaq. And if you look at the 5-year and 1-year chart in terms of long term, it's showing the 5-year chart, we are in the bearish movement, moving up to the upside, and the 1-year is in the bullish movement and going to the upside. So indications for the long term is basically upside, as it always is technically if you think about it, again, since 2010 going up regardless, right? And created all-time highs today. And then in terms of 6-month, 3-month, and 1 month, pretty much essentially showing more upside, specifically 6 month. So 6 month is showing upside, and then 3 month, 1 month, it looks like they're pretty much trying to potentially arch down. 3 month, not necessarily that much, but you can see the lighter shades of green. And then the 1 month, I believe it's in the bearish movement. Let's see right here. Yeah, in the bearish movement. But I think essentially we still have more upside tomorrow. Now, this is just my opinion. I'm not a professional, so please do your own due diligence and research before buying and selling. I think tomorrow, in my opinion, is more upside. And then we start potentially maybe coming back down and then testing these resistance they become support levels at this point, and maybe have a false breakout. What I mean by false breakout is start going back onto in terms of lower levels potentially, or do we start hitting, for example, like I showed, these higher, like since 2010 upward trend resistance level, because we ended up hitting it, like coming back down since 2022, hitting it and then arching down, not passing it, right? Even though we passed it in 2020, 22. So the question is, are we going to pass it this time? Technically, if you look at the S&P 500, we have lots of room to grow, go to the upside, and they kind of correlate the S&P 500 and Nasdaq for the most part. So because we have so much room to the upside for S&P 500, think the Nasdaq will break through personally. Again, not a professional, so please do your own due diligence and research before buying and selling, but that's just my opinion. Now, it doesn't mean necessarily just going to go to the upside all the time. Obviously, there'll be down days or down weeks and all that stuff, but I think that's the general sense of what I think will happen, especially given how it's like an election year. I don't think we'll see anything drastic to the downside for the time being. Now, to go to specific numbers in terms of support level, we did break through all-time highs, right? And then given how we broke through it quite a bit, that's more of the reason why I think tomorrow will be an up day. We do have a lot on the calendar though at the same time, so anything could happen, and then the false breakout could be activated pretty quickly overall. Now, the VIX is on the low side too at the same time. The VIX volatility index is at 12.44, so it is quite low volatility. More of a reason why I don't think we're going to end up heading lower tomorrow, but anything is possible, especially since I guess technically if you're going off the technicals, the 1 month is in the bearish movement, same with the S&P 500, and then 3 month is technically maybe arching somewhat debatably to the downside, so it could react tomorrow to the downside. Now we do have this upward trend resistance line / support level, so resistance, support, support, support. This dates back since November 2023, and then we had resistance, 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 and then horizontal resistance level, broke through all those, an all-time high, broke through all of it. Now the question is to the upside, to be honest, if you're very optimistic, which I don't think it's that crazy out of the realm to be honest, is that 2010 upward trend resistance line that I was showing earlier. This is the line. If you think we're going to get to it, I don't necessarily think it's going to be tomorrow, but it'll probably be in a couple of days. And the longer we take, the higher the high will be, if that makes sense. Like if we meet it, like let's say tomorrow, you're looking at give or take $463.97. And then if you hit it later on, it will be $464.50. Now again, this is not the perfect line, I would say. So plus or minus maybe $1, give or take, and some change. So you're looking at that realm. So I'd say mid $460, so 465 just to be safe. And then you could potentially think, okay, that's where we're going to meet the high, and then probably start coming back down hypothetically. But again, when I showed the S&P 500 graph, you will see that we have a lot of room to the upside. So because of that, and they kind of correlate, I think we'll just break through it anyway. But again, we do have the Fed meeting next week on Wednesday. So if it takes quite some time, and then the Fed meeting comes by, but to be honest, from the last speech that Jerome Powell had, it was either yesterday or 2 days ago, they seem like they're like pretty optimistic in a way, right? Not necessarily optimistic, but it seems like they're like everything's on track. That's what it seems like. And if everything is on track, then they'll pretty much, the market's only expecting one interest rate cut this year. So if they give the market what they want, I don't see a real reason for a pull unless something happens, tensions in the Middle East or something drastic happens where the market gets pulled. So there's that. Now, in terms of the high side, again, that is essentially what we're looking at, pretty much $465 just to say, give or take. But then to the downside, pretty much the resistance levels would act as support. So we had the 450. I don't think that necessarily that would hold us too much, to be honest. It would be more of the 446, 448. Yeah, just to make sure I was saying it right. So $446 to 448. We have a small channel, not a small channel, but a channel there that, in my opinion, will act as support. And then after that, you have the 445, but it coincides with the moving average plus the upward trend. This is probably out of scaled. But yeah, you have the upward trend resistance / support level that will hold it with that moving average that I mentioned earlier, 445, 440, 445, 444. And then within the 6 month moving average is 443 is showing, but I think more like it would trickle down to the 440 anyway, regardless. So the 440, which with a horizontal correlation, and then ultimately getting down to the 435, 434. And I think that would probably potentially hold us. I don't think anything drastic would happen. Otherwise, I would update you guys. But 435, 434, you could see, for example, a bunch of packets drop right about here at the 433, 434, just comes down, jumps up in that range again, 434 to 435 range, multiple spike down, spike up, back up after that. So 434, 435. We could get down to the 432, 433 packet, which is quite strong. I don't think we'll get down to 430 because then I think issues will probably potentially be happening personally. Plus it coincides with this moving average right here. But again, in my opinion, just my opinion, I think we'd bounce off the 434, 435. Worst case scenario, the 432, 433. And then after that, there is more support levels. But I think the movement's more to the upside and more challenging this upward trend resistance line since 2010. Now, in terms of the S&P 500, same thing goes and applies basically for the most part. We have the channel dating back since 2010 for the new viewers, just in case. Upward trend resistance line, upward trend support, and then the major crashes, upward trend support. Did not break through it, maybe potentially small false breakouts right here. And then we have so much room to grow to the upside. It's going to be quite a bit of time technically before we come down. Again, in my opinion, just because of election year, I don't think we tend to see major crash. But for the 5-year, it's the same thing as the Nasdaq, curving up to the upside, so pointing to the upside potentially, even though it is in the bearish movements at the time being. In terms of the 5-year, the 1-year is in the bullish and really strong, to be honest, indication more upside. 6 months more short-term upside. 3 month, same like as the Nasdaq. It's in the bullish, but technically somewhat potentially arching down. And the 1 month, I believe, just like the Nasdaq, it is in the bearish movement and going down hypothetically. So in terms of technical, you could think that tomorrow is going down just like I stated for the Nasdaq. The only thing is the volatility index is low. There's no real reason. I know there's a lot of stuff coming out tomorrow, but I don't see a real reason unless it's like a full false breakout. Because just like NASDAQ, we have an all-time high for the S&P 500. We broke through major resistance levels. We had upward trend resistance level right here. You could see multiple times, kept us down, and we broke through at the same time breaking through all-time high. It's just perfect cross right there. It's like crosses over the all-time high at the same time as it breaks through this upward trend resistance line. And like we before, I guess it doesn't matter to go through this because I've showed it before in the past videos. But either way, for the most part, the question is how high could we go? Now this one is a little bit more difficult because given how the graph, we have so much room to grow. I don't think we're going to meet this, and it's impossible to meet this in a couple of weeks. But hypothetically, to get to this high up level, let me just draw it just quickly. If you're thinking we're going to meet the 2010 sometime soon, you're looking at pretty much in the range of $632 or something like that. Again, it all depends on when we meet it. If we meet it later, the higher the high will be, right? And right now we're sitting at $529.78. So obviously that's not going to happen, right? It's going to take some time. And especially since, again, in my opinion, there's a correlation between NASDAQ and S&P 500 sometimes in terms of movements, right? Where it's like most times they're both green, most times they're both red and all that stuff. So there will be down days. So more it will be like constantly moving up overall with down days, right? If that makes sense. Now, in terms of the closer ranges, and let me adjust this for a sec. So to the upside, this is quite difficult. I was doing some calculations and it came up to like potentially 532 if you think the false break, it's a false break, I'm going to get pulled back. But I should have most likely used the Fibonacci scale, to be honest. And if you know how to use Fibonacci scale, that's probably the best way to do it. I have to revisit it. That's the only problem. And I want to give more accurate numbers versus not just giving accurate numbers for that one. But for the upside, it is quite difficult. You would have to use a Fibonacci scale or something else. But to the downside, I would say most likely the supports are more reliable, but this will be coming up later on. So essentially, we would drop down to when I checked it earlier, yeah, there is technically the support at the upward trend resistance line that could act as support coming down, but I don't think it will at the $527 price point. But I think more of the moving averages will come into play as we see right about here. So we're looking at $523, $524, and then $520. In my opinion, I think the 520 would hold. When I was looking at the other perspective views of the charts, 520 seems like it's a good hold for, so 520, maybe 519, a little bit of the drop was like 519 and some change on the high end, and then bounce the upside. Otherwise, you're looking at the support of the next, I guess 515, but there is support at the 514, but there is support at the 515 as well. And I don't think it will go any lower unless something drastic happens. Again, there's nothing really, in my opinion, in the horizon. We have the volatility index on the low side. The investor sentiment is on the bullish side as well. And when I looked at the sentiment in terms of the next 6 months, what the investors are expecting, so on and so forth. So it's more to the upside. But that's basically it. Hopefully you guys like the video. Hopefully you guys enjoy it. I'll keep you guys posted again if anything drastic happens on either X or YouTube. And thanks again for watching. Appreciate it. If you do like the video, consider dropping a like. It does help the channel. So thanks so much for that. Thanks again for watching and supporting on X and YouTube. Take care and have a nice day. See you guys in the next video. Peace.